The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And Monday through Friday, 11 o'clock till noon. Following 2 great hours of Steve Rhodes. Today being Wednesday, of course, you get a wonderful technician, Larry Pesavento, then another wonderful technician doing diagnostic trading, and that is Daryl Martin, followed by yet another great technician. We've got Dave White. Then you've got Ken Shreve, who's the IBD specialist, chart patterns. Then, of course, you get the master of volume and Fibonacci expansions and the Tiger, Gartley and Tiger Butterfly. Tom O'Brien, 4 o'clock till 6. So we have a full house. Let's look at the market. What will we well, first of all, I've got a chart up here. If you're looking at Tiger TV, then you will be able to see right in front of you a 120-minute chart of what? This is the E-minis. This is the E-minis S&P 500 June 2013 contract. Now, what's important about this particular contract is, number one, there's a pattern that I've been speaking about. I spoke about it actually for about 10 days. We've been looking at these patterns. I've been repeating over and over. And that is a pattern that I call the falling axe. What is it? It's a descending cone, obviously expanding. Otherwise, it would be a wedge, or a wedge, an expanding wedge. And the most important thing about that is if, in fact, you break out above the trend line resistance, basically you're looking at a series of lower highs and much lower lows. That creates a resistance point, and at a certain point you don't even have to think of the support level, because the support level, it's done. You're only looking at the resistance, because you want the resistance. The rule is resistance lines should become support lines on the way up. Support lines should become resistance lines on the way down. And that's just the way we look at things. And it's a real simple concept, and the whole principle behind the concept is, and this is the thing that is so remarkable about using technical analysis. In technical analysis, what we use are price points. And what is the price movement? The price movement essentially is a time freeze of every minute or larger, or if you're looking at ticks, every tick. It's a price freeze at a certain point in time of the price move that has been occurring. And that price move will either be moving up or it'll be moving down. If it's moving sideways, you're talking about sideways in a context that says, yeah, it's sideways, but if you had to dig deep, and this is the whole thing about Elliott wave, for those who have been absolutely trapped in incorrect Elliott wave analysis, is that if you go sideways, go to the smaller time frame, because you'll find both an Elliott wave thing, you'll find a Chapman wave, you'll find movements. So you're talking about even in 2-minute or 1-minute price moves, you will still get sideways action. Of course, you have to get down to seconds. I'm just waiting for them to put in a 1 second trading, because I love doing the quick ones, the 1 minute charts. They're really good. Although I've been practicing, and I'm really proud to say, I've used that technique. It's a technique of using, say, hitting, if you're playing tennis, going towards the net, and then have a practice where you're both hitting the ball and it's not allowed to hit the ground once. That quick move, like as you play in doubles, when you step back, all of a sudden everything's so much slower. Well, I've been expanding the time frames. I'm coming back to that. I used to years ago be able to trade very long term, then I went to shorter term. And then with the futures, because they move so quickly, I practiced doing really quick ones. Now I've started to emulate the same techniques, but the entry point has to be a little bit to the extent that you can widen your stop just a tad, because you're really looking at larger time frames. You obviously then have to use slightly wider stops and sells or buy stops. So in this particular instance, we're looking at the falling axe pattern. What is that? That's a declining line in the E-minis from 1558.75, the peak F high, the doji peak F high at 4 o'clock on the 15th, that plummeted down to the Cyprus 1529.50 low, right on the 200 period moving average. That was Monday, yep. Then it bounces to 1552.25, and then the rising trend line 200 period moving average comes again. That was just, if you were looking at a 5-minute chart, I sent this to subscribers this morning, and it's especially, I spent it especially to the people who've done my Master Trader series. Look, there were 1, 2, 3, 4 dreaded H patterns. Whenever you get to the third one, that's when you can start the move that is either 3A or 3B, or it could be 4 where it goes to a lower low and starts to move up. That was just a fantastic buy signal intraday because of the doji at the low, and then at 130 you started to move with the technicals moving up. So that was great. And where did it stop? Right on the 200 period moving average of the 120-minute chart, double top. So those are techniques that you want to apply here, and they're absolutely applicable. So when I'm looking at the E-mini, we're in leg B up in the 120-minute chart. And what's needed, I actually do this in, but I'm going to have to do it a little lower right there. I'm just going to drag this down, just to give you some kind of sense of what I like to look at. So that's there. And just for now, I'm going to make it pink so you know what I'm looking at. I'm going to make this green. And it says, even with the Fed coming out this afternoon, there should be a little stalling motion in the next 2 hours or so while they're waiting. And if the Dow comes back to, it's up 69 right now at 14,525, having made a new all-time high, leg D. The others haven't done it yet. I'm waiting for the others to do it. I've got patience. And the S&P is up 9.41. See, today we have today is exactly what I love to see. You've got the S&P up 0.61, and the Dow is down about 13% lower. It's at 0.48%. So I like that discrepancy. The 500 are stronger than the 30. So now let's just go back to the target. And that says, you know what? There's a good chance that by tomorrow at 2 o'clock on the 21st, we should be breaking the 1558.75 level in the E-minis. That would be very positive. And, that's just, it's one way to do it. And it's only a directional indicator. It isn't, nothing's locked in stone. If it was, it would be prehistoric. Okay, so let's run the numbers. That's 120. Let's get it out the way, and I'm going to do, in fact, you know what I'm going to do? Let me just double check here. 1 second. I need to just check on my, did I do something wrong here? Whoops. Give me 1 second, because I do not want to get out of here without making, whoops, I'm a little stuck. All right, well, I'm going to organize that. Al, if you want to just IM me, anyone who's called in, I'd appreciate it, because for some reason I've just covered up, or maybe I've just covered, oh, there it is. Okay, I've got everything organized. We've got one caller online, and I'm going to be back in a moment. Thank you. I've got everything. I'm organized. And I just want to run the numbers. Here's the Dow. INDU made a new high today at 14,545. That's leg D. The stochastic is at 91%, but turning down, but it is at 91%. And yes, there was a huge volume off the top, the exact top from the 15th. That was peak C. You know what? I'm going with my indicators for now, and my indicators say the 9-period exponential moving average is what we're walking. So far, the doji candle of yesterday, we've gone above it. We need to close above it to be really secure, and that would be above 14,514.34, and 14,438 is the support. The weekly chart is only in leg B. I could make a case that it's in C. With a phantom peak. I do not like to get into this whole phantom peak business. It's really there only under special circumstances when needed. So let me just quickly do this. The S&P, SPX.X, I'll do them all as we run down. SPX is at 1557.23, made a high of 1559. It needs to get above 1563.62, 1 penny above, and we've started leg what? We've started leg D. That's the official leg D because it is the SPY and the diamonds that are behind. But I go with the root, and the root is the most important thing. But my assessment is, it's just my assessment, is that we are, once you start these falling axe breakouts, what's the falling axe breakouts? And my CD introducing the ChapmanWave methodology, only available at TFNN. Falling axe formation. See that? When you break out above it, you can go to 1-to-1 to the upside. And look at this. Look at that beautiful one that occurred when we broke out on the 4th of March. In the S&P, remember, that's the morning that we went along the Dow diamonds, 200% diamonds. Now, let me just see, are the diamonds, did that make 87.48? Oh, got a double high in the DDM. It needs 1 penny more to get to leg D, and the SPY is way below. It has to go to 156.80. It's only at 155.43. I say way below because of the chart. In fact, it's only 1%, about 1.25% that it needs to go. And the IWM is in fact at not nearly. It's almost close to breaking that falling axe, that descending cone resistance. And if it does it this week, goes above 94, 96. 1 penny above, starts leg D, weeklies in C, and if you remember the S&P, I don't remember, I think it was in C, S&P's in leg C, 1 penny above, extends leg C, I can't get D until a week later. And I just want to quickly do this, the GLD, look, the GLD, I've been talking about the arch formation. I even drew it in yesterday. They said, yeah, you can make it even a slightly higher high in the arch formation, but there's a lot that has to happen to really break out from this formation. And so far, that's all I'm seeing. But I do suspect that the GLD is going to have a slightly higher move, possibly next week. I don't know yet. And the SLV, man, is that a pathetic chart? Look, it's already in lower M formations. Pathetic chart right now. But this chart has the potential to break just once, test or break the low of 27.35, and then you could start a strong move to the upside. But I just mean a counter trend rally, because I don't think the SLVs, I don't see anything in it. Now let's just go to bonds. Let's go to the TLT. TLT is sitting on the 9-period moving average, down 46 at 116.97. I think that the next couple of hours, because we have to get a pullback now in the in the market as they await Bernanke. Bernanke's not going to say anything much. What's he going to do? So that's what I'm looking at there. Let's just quickly skip anything. Dollar is down 32 cents. Dollar has made a peak E, and that's why there is a chance for gold at least to bounce. And yep, the dollar is made a peak E, but I haven't got it as, I've got it as a sell signal. But until the price closes again underneath 82.66, which is the 82.60, which is the 9-period moving average. But I even have to say I want to see gold under 82.05, and then I'm going to go immediately from a sell signal to a sell mode in the daily. I'll be back with Mike in Long Island straight after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. This is the Tiger Technicians Hour. Dow's at 58, S&P's up 8. Oh, hanging in very well. The bias, you can see the bias is to be buying, and the nervousness, as the nervousness comes in, so you get this kind of this pullback, but the volatility index dropped very sharply. It's down at 12.65. And let's go to our first caller. We've got Mike in Long Island. Hi, Mike. How are you?
Good. How you doing? I guess today is D-Day.
Letter D-Day. Yes, it is D-Day. I never thought of that. Very good.
All right.
So you'd
Enough
like
with
to
the jokes, but
yeah. Well, no, actually, jokes are fine. You can do jokes anytime you want. You wanted to look at
Ultra Petroleum. You know, this one was at 100 at one point. It's come all the way down. I'm trying to get bullish on natural gas, and I think this. Yeah,
just a minute before you. Let me ask you a question. How come you chose the stock?
I don't. This was a big winner. This was a big gainer.
Yeah, but a gainer.
I don't remember. I don't remember. It just
no. I tell you why I'm asking. Because out of the blue, I had a question from one of our tigers, and someone who I know has been to my workshops and all.
Okay.
Asking about the same stock, UPL, today, out of the blue.
Yeah, I have a couple of acquaintances that have traded this stock and owned it.
All right. Okay. All right. What was just a pure coincidence?
I think I know what you're referring to. That's true.
Okay. So now this is the question.
The only thing that concerns me here is on the monthly, there's that wick back in 04. Is that anything to be concerned about?
You're talking about that little doji on January of 2004 between 1327 and 1127?
It goes all the way down to $9.
Oh, okay. No, you know what I'm looking at here, and this is just an incredible chart. This is a great chart to demonstrate the ChapmanWave from the low bar that it made on. Is that correct? From its IPO back in January of 2001. Folks, we're looking at. Of course, I've been working at this all the time. Ultra Petroleum Core. It's trading now at 20.04, up 2 cents. But when it IPO'd back in January of 2001, it went peak ABCD, then it had an instant restart because within 3 bars it made a new recovery high in a certain pattern, and then it went ABCD to an E, a top at 70, round number 70, January of 2006. So what happens is, round number high. What happens is it comes down quite sharply, not a big deal, just from 70 to 42, I think it is. 42. I'll tell you right now. Click. 4180, September of 2006, and then starts a brand new ABCD, and it goes to E again at 102.81. That's the high you're talking about. That was the high of June of 2008. Now, this is very unusual. It had a double top, 102.81 in June of 2008, 102.81 exact to the print high in July of 2008. That represents the same technique that I use when it makes a fractional low, and I call it a silent signal, and then goes down after that. Because what it's saying is it didn't even have enough strength to make a 1 penny higher high instead of double top. And then you got to watch it because the technicals all failed at exactly that time. And it plunged. Now that's a plunge. And it goes to 28.85 back in December of 2008. Then it rallies to an A, B, and then it makes the pattern that I call the dreaded H, lowercase h. And that fails, a very long one, going all the way from 2008 until it finally fails in 2011. And then it goes like a 1-to-1, not quite a 1-to-1, close, between the high of October of 2009 to the 28.85 low of December, and it goes down to the most recent low of 15.26. So the monthly is saying, hey, the MACD is flattening out and it's going to soon pick up the last important signal. It hasn't yet given me the signal to say that it is now in at least a buy signal, not a buy mode, but a buy signal. But there was a divergence between the stochastic, the left side to the right side, and that's important. And that leads me to the weekly chart, and that's going to be very interesting. We'll look at it together. We're on with Mike in Long Island, New York, looking at UPL Ultra Petroleum Core trading at 20.12, made a peak C in the daily, and I'll explain exactly
TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's up 62. S&P's up 869. And we're on right now with Mike in Long Island, New York. And we're looking at UPL, which is Ultra Petroleum Core, trading at 20.06, up 4 cents. And we were looking at the monthly chart, which is, this is the first decent candle that agrees with the technicals. The last big candle of June of 2012, the MACD was still the beta between the difference between the 9-period moving average and the fast moving average and the slow. That's the green one I'm pointing to, and the red one was just way too big, and the stochastic was still just flattening out. Now there's a positive turn, but it's just the start. So it's the weekly chart that is so important. And the weekly chart, so Mike, what I'm looking at is that the weekly chart made lows of 17.62 the week of April the 27th of last year, and then slightly higher at 17.66 in June of the week of the 8th of June of 2012. So that started ABC, and it went to a peak D, then it turned around. It made a left side, right side price time match. Let me just change the color so everybody can see what I'm looking at here. That's the middle chart is always the weekly chart. The one on the right is the monthly. One on the left is the daily. And when I drag this one up here, that is the 120-minute chart. So here we go. This is a strong leg A to the upside. And the rule is in the ChapmanWave that when you break in an H pattern, when the bar that goes underneath, within one bar, there should be an attempt to reverse back, just to go back to test the arch formation above the left side low bar. This took 2 bars to do it. The second bar just touched that level. Third bar broke out. This is the fourth bar, fourth week that we're above it. I've got to be careful that it isn't just a single leg A up. So what says it isn't? Well, the stochastic's at 51%, and the MACD is turning up. And the rule of thumb is that once you go back above, if it's going to turn into a brand new buy signal, you've got to look to the first left side peak in the arch formation as a resistance point, because that's where it could go to. That would be 2269. So let's just leave the weekly there, because we don't know what the future is going to bring, other than to say these are the parameters to look for. And 18.63 is really important support. Now we get to the daily. And the daily says great turn from 15.26 low. And that's a volume spike. Now, the way I use volume, it's a little different to most people. I use volume, especially when it's a culminating, throw your arms up in despair, get out, a climactic reversal, and that says that the low of 15.26 could produce 27 to even 50 bars before it even comes back to retest 15.26. It doesn't have to do that, but it's a very powerful signal in my work. So I'm suspecting that we made a peak C, and as I wrote to the questioner about UPL, I said I'm anticipating it's going to make a leg D above 21.55, but 20.74, the 200-period moving average that it hadn't even touched since it broke down back in November the 1st of 2012 at 22.68. All I can say is that there's a real good chance that is going to, the price is going to pop above, slightly above 21.55, then pull back. The big resistance is at 22.69, the high of the 23rd of November. But it's also going to possibly touch 19.54, and I'm going to draw it in now. I'm going to draw it in as an oval rather than as a rectangle, and I'm drawing it in to show that this is what I'm anticipating over the next 10 sessions, 10 to 12 sessions. A move above, retest 20.74, a move just below, maybe even down to 19.54, and then I suspect if it doesn't break $19 over the next 3 weeks, but instead is using 20.60 to 20.74 as a support level, suddenly your weekly starts to improve. So I think it's worth a nibble right now, a nibble because you want to give it a little bit of room. I would say you give it about a dollar right now, and if it does make a high of 21.56 in leg D, then I wouldn't raise the stop on that position. I'd keep that position, and I'd look to say, okay, where could I add? And I'd wait for the oval formation to unfold if it does, and then I'd be prepared for a breakout. I like it. I don't like it if it closes under $18.50 in the next week and a half to 2 weeks. But right now, I do like it. It's just a starter position. Hope that helps you.
Yes, great. Thank you very much.
Thank you very much for calling. And I'm just going to mention, as we're about to sign off here, it made a peak F in the 120-minute chart, so it needs to digest that, and that kind of fits in with the scenario I was talking about. Let's go to Chris in Boulder, Colorado. Hi, Chris. How are you?
Good. How are you doing, Basil?
Very well, thank you. And I'll be doing a lot better when it gets warmer.
Oh, yeah. I love the tennis analogy that you gave at the start.
Okay. So we're looking at MS. Is that wait, MG?
CMG.
Oh, CMG. Oh, there was a G missing, but I love the chart of MG. I don't love it. I like it for now. I haven't done my work on it. I'm putting Chris, CMG. I always make notes in my notebook. But look, I love serendipity. Serendipity has given me stocks in the market that have been absolute great winners. They've also given lousy losers. But it's just, I love serendipity. Don't ignore it, folks. It's a very important tool in your toolbox. It's called a mistake in your typing in, especially with me, the great typist, always making mistakes typing it in. My spelling is good, but my typing is terrible. So CMG is at 322. It's up $4.77. Now, you remember I spoke about the U patterns and that there might be another attempt at a U, but this one I'm suspecting is going to fail. I think that's where we left it off last time, to do nothing until we get some clearer signals. The high was 334.89, and that was done on the 6th of March. Folks, we're looking at Chipotle Mexican Grill. Now what I'm looking at, and let me tell you, it is back on my list as a potential short, but I don't want to make a mistake because it pops up so quickly to the upside, telling me there's still residual buying. There are still many money managers that consider this a stock that they missed and they would like to get back in. I don't see it that way. I think it's a hat-trick top. I think it is done for a while, for a good while, until it takes about another 3 to 5 months. And then maybe it's going to be a really strong stock as a counter-trend bounce. But I don't think it's ever going back to the 442.40 until it does a lot more work on the downside. Now, if you look at the weekly chart, basically it's climbing the 9-period exponential moving average with a relatively quick low of, on the 26th, the week of the 26th of October, of 233.82. I'm just going to make this a little bigger because I'd like folks in looking at the charts to be able to see this. So I'm just expanding it a little bit. This whole thing now will be the weekly chart. There it is. If you remember that incredible move back in 2012 into early 2013 when it was walking the 9-period moving average, and it had this incredible bars, just not, well, they're big bars in price point, but not so much for the percentage because it was such a high price stock. But it just made a white candle or a doji candle every single week from the moment it broke out back in the week of the 23rd of December of 2011 until it made the expanding bar peak E-top at 442.40 the week of the 20th of April. Well, look what it's doing now. It's emulating that by constantly coming back above the 9 EMA. Mm-hmm. But it's using so much effort and time, and it's gone from, it's a nice percentage move from the low of 233 to the high recently of 334. It's 100. Hey, that's, what is that, 28% gain or something, 30% gain? That's really very good. But my suspicion is it's running out of time, and it's going to be a bad news event, and that bad news event is going to take it into the wick of the 18th of the week of the 18th of January between 301 and 266. Now, what are we doing trying to play this? I know that you're looking at this as a potential, and in this case, I think a potential short, right?
Well, actually, I'm already in. I'm already in at about 325.70 from March 7th.
Oh, so okay, yeah. So you beat March 7th, huh? March 7th. Oh, so you're still in it. Okay. And it hasn't bounced yet. Oh, okay. If that's the case, I'm not going to change anything about what I just discussed other than to say I believe that the candle, the doji high of 327.12, oh, I think we spoke about this, 327.12 on the week of the 15th, that was last week. That's going to be important. If it closes above it, it starts to enter into that upside down. It isn't a Roman candle, but it's almost like a butterfly candle, and that is at 334 is the high. Okay, you're in it. I want you to handle the trade and then to add to it under certain conditions. Handling the trade says between now and Tuesday, if we don't get to speak, if at any point this gets close to, you're in three, what did you say it was, 320?
325.7.
Okay, 325.7. Okay. If it starts to get towards 324.10, you've got to be a little bit careful because it's going to try to tackle the high of 324.53, the high of last week. So far, every time it's tried to rally, it's failed. It's a little bit like, I'm a little afraid to talk about this. I don't believe in the trading gods watching down at me, but I do. Actually, I do, because it's a little hubris. So I'm not going to talk about it. But there's a particular stock that every time it tries to rally, it gets just knocked down by the 9-period exponential moving average. Already today's had that, but now it's trying to tackle it again. Now, it's also very high priced, and this one is also a little bit high priced in the sense that at 321, it's much lower than the 442 high, but it's in the whole category of the Googles, the Apples. They're just in fact, if you go back to 2007, at that particular point in 2007, I don't believe that there were as many triple-digit, very high-priced triple-digit stocks as there are now. I might be wrong. I'm not even sure how to calculate that. That's probably an Investor's Business Daily question. But it just seems to me that there are many more than I expected, triple-digit stocks. So what I'd be looking at here is I believe that you're in the correct mode. I haven't got the signal yet, and that's what I mentioned to you in the weekly chart. The weekly chart is still good. Yes. But for some reason, it hasn't broken above 334.89. And everything about the MACD and stochastic says that last week, especially this week, it should have been up there. So I think it's losing momentum because of the terrible chart in the monthly. The technicals are very poor. So here's my recommendation. Stay in the trade. Mm-hmm. I don't know what your stop is, but I suggest that at 300, in the 320s, to have a stop of $5 to $6 is really not a big deal. 1.5%, 2%. It's just you got to have some kind of a stop, and I wouldn't go much more than that. My suggestion is, if CMG gets towards the 324 mm-hmm. to 325.30 area, you've got to be watching the fast-moving average of the MACD and the stochastic. If the stochastic hasn't gone up more than 2, it's at 36%. If it hasn't gone to more than 47% and the MACD hasn't turned around yet, I'd be looking to add to the position. Oh. Okay, now on the downside, that's on the short side. But on the downside, if by tomorrow or Friday it's down at 319, I would add a small position, treat it as a trading position, with a stop of about 4 points on the trading position. Why? Because if it cannot hold above 321 into Thursday or Friday, that is real weakness, and that's telling me that the weekly chart is about to turn down. I'm still a little afraid of the fast-moving average of the MACD, but the stochastic, if it dips by the end of the week to under 80%, that MACD will start to pull back, and at least you can use the trading position as a target for 317 to 313, and you can constantly lower your buy stops on your positions. And then I think you've got to be careful. I think at 313, it has another strong bounce. So I hope that helps you.
That's great. You were on such a roll yesterday that I didn't call Tuesday like I was going to.
Oh, okay. Actually, you're not the first person to say that. I didn't even realize I was on a roll. But in the meantime, back at the market is doing a little roll now. It's only up 52. S&P's up 766. Hey, good luck with this trade.
Thank you.
I hope to be joining you very soon. I'm waiting for a little bit more, and then I might consider it as well. Thanks, Chris.
Great. Thank you, Basil.
And we'll be back with Ernie in Dearborn, Michigan. I haven't heard from Ernie in ages. We'll be back with Ernie in Dearborn, Michigan, straight after this message.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till 12. Dow's up 55, S&P's up 7.95. And we're going straight to Ernie in Dearborn, Michigan. Hi, Ernie. How are you?
How are you, Baz? I'm fine. The reason I'm calling is kind of an unusual call. I was listening to your previous call, as I do virtually every day, and the fellow asked for CMG, and somehow I thought that, sometimes it's hard to tell a letter, you forget it or something, and I own NG, and I thought that you thought that he had said NG. Am I correct?
Did.
And you had like a little comment that raised my interest as to what you thought about it. It sounded like you said, that was something about it you were going to say, and then you got into the CMG. What are your thoughts on the NG?
It's so interesting. I get so involved with the charts that I just do the patterns. I do the ChapmanWave and everything. Here I am doing NG, which is Nova Gold Resources. And I had actually said MG by mistake because that's what Al, my producer, typed in, and he missed the C, and then he put the C in, but I didn't see it until afterwards.
Yeah, right.
And but MG is let's see, what is it? Let me just have a look at MG. MG is Mistrust Group, Inc. I thought it was Mistress Group. I thought that's a funny name for a group.
Never even heard of that
Mistrust,
one, right?
Mistrust, and it's a very nice chart pattern that I'm looking at here. So have a look at it, but you wanted NG, is that correct?
Well, yeah, as long as I got hold of you and I made the call, let's take a look. I mean, obviously it's very low, but it's got its problems. So give me your thoughts, please.
So NG, folks, is Nova Gold. Just finished. I had done this on my black charts in great detail. Look at this. You remember, if you were listening to the caller before, I had said, when Chris was talking, I had looked at, it was Mike. It was Mike, and I said that the stock we were looking at, UPL, had a capitulation, a huge capitulation low bar with a massive volume spike, and that can give you a rally. In my work, is a technique that I've developed over the years that can last between about 27. It can even go up to 52. Now, that would be a yearly chart. So 27, probably not on a yearly chart, but it certainly works that way on short term. So look at this. NG, which is Nova Gold, made a low at $3.98 on the 15th of November. Then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, 4, 5, 6, 50. So it goes 50 bars, about 50 to the 10th of January to PE, and then it goes 50, 1, 2, 3, 4, 5, 7, 8, 9, 17, 80, 81, 2, 3, 4, 5, 7, 8, 19, 91. So it's taken about 100 bars to get back to test the left side low on the 22nd of February. So that proved the technique that I was talking about right there, that you can have a fabulous rally. It doesn't have to give you points. In this case, it gave you a great percentage gain from 398 to a high of 503. I'd take that any day. Now what is it doing? Well, it looks like the SLV chart. It's making this sideways consolidation with no real sign of strength, because the MACD and stochastic rallied, but all it managed to do was to get off the bottom from 385 to try to test 414. I suspect there is going to be a very nice bounce in about between 5 and 7 sessions. I wouldn't be surprised based on the weekly chart, because it's attempting to have another one of those weekly spikes. Now it's got a declining wedge. This is a decreasing cone formation. So I'm going to make a suggestion. I would not do anything right now. Maybe if you wanted to nibble at it, because all you have to do is put in a stop underneath 385. So that's 7 cents. It's not a big deal. I think it's trying to form a base. I'm going to ask you, if you have a chance. Today is Wednesday. Can you call me Friday or Monday? Let's look at it again. That's when I think that the gold charts are going to give me a really good sense of whether they're going to bounce as the dollar is pulling back a little more. So I would not touch more than a nibble, and that's about it. Call me again, okay, Ernie?
Have a wonderful weekend. Bye now.
Thank you. You too. Folks, stay tuned for later, Pennsylvania.